One big problem I notice a lot of you new traders are having is finding it hard to decide which direction you actually want to trade to. Because most of you get on the chart and don't know if you should be looking for buying opportunities or looking for selling opportunities. Well, in this video, I'm going to break down to you a step-by-step guide on how you can easily decide which part of the market you want to trade to from the moment you get on the chart. Because a lot of you I've received so many questions, so many are asking me, how do I easily decide? Because when I'm doing my live streaming, you see how easy it is for me to analyze the market. Once I get into the market, I know if I'm looking for a buying opportunity or I'm looking for a selling opportunity. So in this video, I'm going to break down for you how I personally get to identify the direction I want to trade to, just like how every good trader should do. So this is without taking much of it. If this is your first time here, hello guys, welcome to my channel. And on this channel, I mainly focus on everything that has to do with Forex, crypto, stock, and every single thing trading. So for more trading videos, do it to smash that subscribe button and turn on the bell notification. So let's get straight to today's video. Let me share with you how you can easily identify which part of the market you want to trade to from the moment you get on your chart. So let's get straight in. So hello guys, now that I'm on my system, let me share with you a step-by-step guide on how I personally identify which part of the market I want to trade to. And this one is something pretty much easy and straightforward when I'm deciding it. So now, for example, there is a pair between British pound and then the Canadian dollar. Now, when it comes to identifying which part of the market you want to trade to, basically is the part whereby you had the last market shift and then the break of structure too. Now, for those of you who are new on my channel, market shift simply stands for change of character, which is the market has shifted from the downtrend to an uptrend, or has changed character from a downtrend to an uptrend. Now, where you had the last market shift to, alongside the break of structure, is where you look forward to trade to, provided that there are no key levels within that area. So, for example, let me show you this sort of market right now. Let me say you have a market moving in this order. We all can see that we had our break of structure and then our market shift, everything pointing to the upside. Let me clear off everything and then redraw this again. Let me say you have a market moving in this manner. Okay. Making it like this first. And then eventually like this, like this, like this, like this, like this. Now let's take a look at this market as a pure example. Let me say you had a market that moved in this manner and then you are trying to identify which side of the market you should trade to. Now basically in this sort of market, we all know that you should be looking for a buying opportunity. Why should you be looking for a buying opportunity? Simply because you had a market shift here. Because from here, you had a market shift with a change of character facing the upward side. And then after this one, right above here, you've gotten your break of structure as well. So after getting a market shift and a break of structure to a different direction, your whole market trading approach should be channeled towards that direction. And more importantly, if this one is being spotted on the hourly time frame. So now, for example, I'm going to show you how I personally analyze the market from my own point. Now, for example, let me start from the weekly time frame as usual. Now, here is a pair between British pound and then the Canadian dollar. And we all can clearly see that the weekly candle is looking bearish. As we all can see, that the weekly candle is looking bearish right here. And then previously, we had the first week was bearish. Second week had a little bullish momentum. However, the third week is also looking bearish. This alone has shown that the market is on a downward side, so we should be looking for sales. Now, after that, if you come over to the daily time frame, we can clearly see that the market has a huge daily rejection right here, followed by a big bearish candle also. All this indicate that we are in a downward trend. Now, in most cases, the weekly and the daily candles will often show you the direction to trade to. If they are bearish, like if you see that the weekly is bearish, the daily is bearish, then you should be more focused on bearish. But there are some scenarios whereby both of them might not be bearish. Now that's where the third system actually comes in, which is where we break down the market structure gradually from the hourly time frame to the minute time frame. So now, for example, let me say you couldn't get it clearly from the daily and then the weekly time frame. Maybe the weekly is showing you bearish, but then the daily is giving you bullish momentum. Now, where you get a final answer is on the 4-hour time frame. Now, personally, when it comes down to breaking down the market structure, to identifying your buyers, I normally advise to focus on what the 4-hour and then the 1 hour shows you. If the 4-hour and 1 hour tells you that the market is currently an uptrend, and then you are a day trader or a short-term swing trader, then I'll advise you to actually follow the hourly time frame direction, because that's what I personally do. So now, for example, let me boil down to the 4-hour time frame in this scenario. Now, here right now, I'm on the 4-hour time frame. Now, let me do what most of you new traders often do. What you often do is that what you open the chart like this, and then you ignore the current market movement, and then jump way back to the old market movement by focusing on this old movement. Now, focusing on this old movement is not always bad, but it's actually bad because this old movement is gone. You should be focusing on what the market is doing right now and not what the market has done back here. Because one thing a lot of you do is that what you come over here and then you identify here that you had what a market shift to the upside, and then followed by a break of structure right here, and then another break of structure right at the top here. Now, for this reason, you'll be like, okay, I had a market shift here, a break of structure, simply means the market is an uptrend. But in reality, this market shift, this break of structure, and this break of structure are no longer that valid. Why? Because we've gotten a new market shift to the downside right here, which means that the market is a downtrend. Now, you see how easy it was for me to actually break down the market. Now, take a look at it. I identified a market shift here to the upside, and that market shift, and that break of structure here to the upside, and then a break of structure. Now, after this, I jumped over to the current market position, trying to see where exactly is the market is right now. So one thing you can basically do for yourself to actually help you solve this is simply, on the weekly time frame, look at the recent 3 candles. Let me clear everything. Look at the recent 3 candles. Now, I always like looking at the market for the past 3 weeks. So what I normally do is I can just box this weekly candles like this. Let me just box them out. So now I'll just box this 3-week candles like this because I want to trade just within this 3-week period. Now I'll come over to the daily. Now even on the daily, I'm still within the range. Now I'll come over to the 4-hour. Now within this 4-hour here, I can see clearly that here I had a market shift to the downside, followed by a break of structure right here. It is quite a tiny break of structure, by the way, but a break of structure is a break of structure. Now this shows that I'm in a downward trend, and I'll still remain in a downward trend until the market eventually gets this high out of it. So provided that this high is still balanced here, I will always say that I will always confirm that I'm in a downtrend. So now you can see with this one, I easily know that I'm in a downtrend, so I should be looking for selling opportunities, because one of the best places that I would have even sold this market from if I saw it earlier would definitely be from this spot right here. See, if I had made the market at this spot before, here is a clear supply level that I could have even easily sold from. At the close of this candle, take my trade, my stop loss about 30 pips, and then my take profit way down here. Now you see how easy it was for me to actually break down the market. Now let me give you a quick roundup of how I easily broke down this market right now. The first thing is I come back to the weekly time frame. Now don't look way back, because when you look way back too much, you always get confused by the old market movement. So for that reason, focus on the last 3 weeks. So I'll come back to the weekly, and then I'll box the past 3 weeks candles, just this 3 week like this. Now these 3 candles here represent 3 weeks. So I'll simply just box those specific set of candles. Now after I box them, I'll make sure that I'm not extending it too far. So I'm just sticking within 3 weeks. Now after this, I'll go down to the daily time frame. And then within the daily time frame, I'll still make sure that I'm still within this 3 weeks area that I've boxed. Come over to the 4-hour time frame. Now over here, I can clearly see that within these 3 weeks, my last market shift is to the downside. So for that reason, I'm currently in a sell market, because if 3 weeks in consistent motion can be in a sell market, that simply means that the market is still a sell until the recent high has been taken out. Now you see this area here, most of you will tend to actually identify this area here as a market shift to the upside. But the flat truth is that this area doesn't count, simply because we have a high over here, and then here is a supply level. So this is a mini range supply that if you come over to the hourly time frame, you can see more clearly. So you can see here is a range supply right here. So until the market is able to sweep out this area here, you will always stay in a downtrend. Now this is simply all I have for you in this video. Is simply how you can actually break down the market structure and then be able to take your trade. Now if you want to learn how to actually do top-down analysis, I've created a video all about top-down analysis for you. Now always remember that when it comes to identify which direction you want to trade to, take a look at the past 3 weeks candles. If it's on a downward trend, provided that what the highest candle of the within that past 3 weeks is still not taken out yet, know that what you are in a downtrend. And if it's in a downtrend situation, know that you are in an uptrend. Now let me look for a different market to actually do this. Probably a market that is buying. Okay, so let me look for a market that is currently buying, which is a UJ. UJ is currently buying. Now let me just clear all the setup off. Now for example, I'll come over here and then I'll box 3 weeks as usual. Now we are the 3 weeks. 1, 2, okay, 1, 2, 3. I see all 3 weeks candles are bullish here. Now I'll take 2 old weeks and then 1 current week. So here is it. And then let me just set it. Now here are 3 candles, right? 3 weekly candles. Now here I have it. Now what does this 3 weeks show? It simply shows how the market is moving upward. Why? Because here I have a market shift. From here, like this place was swept off. Or even if I don't want to take this one, I can go for the clearest market shift right here, which is this one here. Which shows that what I have a market shift to the upside. Now following this market shift, I have a break of structure here to the upside. Now this simply shows one thing: the market is in a buy momentum, and then I'll only focus on looking for buying opportunities. I'm not going to go look for something that is zone from the past 3 years or a zone from the past 10 years. No. Focus on the current market movement and identify the break of structures and then the market shift in the current market movement. Just make sure that when you are identifying them, you are not identifying them into key support and resistance levels. So if the past 3 weeks are actually in favor of the trade, then just focus on that direction and then make everything easier for you to break out. So from here right now, the only thing left for me is simply identifying my supply and demand levels. So this demand level has been mitigated. This one here is a key level, so it can be considered. And then just look through, you get your demand levels. Now if you don't get your demand levels, you just keep it. But if you find your demand levels, of course you have to take them. So here is a demand level way back here. Here is an old demand level. Here is another demand level right here. You see, demand level right here that you can trade from. Why? Because it led to a break of structure, as we all can see right here. So now this is simply how you identify which direction you want to trade. To simply ask yourself, where is the recent hourly break of market shift or change of character? Where is the last hourly break of structure? If this break of structure and then the change of character point to the upward side, it simply means that you should be looking for buys. But if you had a market shift to the upward without a break of structure, then you shouldn't be looking for buys yet until it also gives you a break of structure to the upward side. The only thing you need to make sure here is that your last market shift and your last break of structure should be pointed upward or downwards. Any direction you see that your last market shift and your last break of structure point to, that simply means that is the direction you should trade to. So this already said, have a lovely day. See you in my next video. Bye.